Hey everybody, I'm back. I think this time we got things going correctly. There's still some music in the background. I don't know if you can hear that, but we'll cut that off somehow. I don't know where it's coming from, but it sounds good, pleasant, mellow. It's mellow and I don't know where it's coming from. I got none of my tabs are open. But anyway, I don't know if you can hear it. Can you hear it? Live. We're live today, so I'm going to share. So yeah, anyway, hi everybody. Stefan here from Truflation. Glad to be back and happy to share lots of insights today. Obviously, we've got big news around the tariffs. That's the big news that we've got going right now. Dude, I don't know why. This is so annoying. I don't know. Can you guys hear the news? Can you hear this sound? It's not coming from where. I know where it's coming from. Nope, nothing from there. Someone's just got music playing in the background. Who knows? This is like super, super weird. I'm just going
to use this feature. Please make sure your app is running and can access the internet.
Okay, I think it shut down. I don't know where it's coming from. Sorry, guys, but it was just in the background. I think it was some random access memory stuff. Anyway, happy to be back. Obviously, we're going to be talking a lot about tariffs and where all of this has come and where we're likely to see this go. Who knows? But it was quite an exciting Liberation Day. And today we're just really going to cover off some of the tariffs, the impact, how the market reacted, what are some of the inflation concerns, and then ultimately employment and the economy and what the effects are, and what will some of the investment situation look like? Is it attracting new investment? And what is the real objective? Is it just to push down the dollar or not really? Let's have a look and dive into it. So it was an interesting day for a bit of fun. You know, the tariffs did spread across everything and everybody. So we saw it impact even Antarctica. So basically, I thought this was pretty fun. One of our team members shared it to me that basically this came out of a summary. This was really out of The Guardian. So nowhere on Earth is safe. Trump imposes tariffs on uninhabited islands near Antarctica. And so somebody did a little image there. Oops. It's over for penguins because the only thing that lives there are penguins, the tiny Norfolk Islands. But they did think of everything. You could give them that. Whether you like it or not, again, it's around reciprocity. And, you know, all Trump cares about is the middle America and following up his promises. I don't know. I heard on one angle that what he's done is he's got Post-it notes everywhere he goes. And what he does is he put Post-it notes everywhere and writes all the things that he's promised. And so he's trying to take off everything that he's completed and fulfilled on the list of promises that he's made and trying to take that away. So all of his promises, which includes tariffs and bringing manufacturing back to the US, is really key. And there was a really good letter that came out. So anyway, he doesn't really care about Wall Street. Not only has he made it public, they actually put it out there. And one of the things is, right, we hate being lied to. And I think we're getting the truth, the clear truth, and nothing but the truth, right? It's straight in our face. If you like it or not, don't deal with it. This is the truth. And we're being told basically here, this is what's on my mind. This is what we're working on, and process it, right? It's number one, this is what my objective is. You're anchored. And everybody goes, oh my God, the anchor is all the way out there. And then bang, that allows and pulls back to a point throughout a negotiation, or once the anchor has been ripped, everybody's dislodged from their original thinking. And that anchor basically allows then to come and hit a middle ground or a brand new ground. And I think that's all Trump is doing. He's throwing anchors out so far out and so radical that it really shocks people. But ultimately, that shock leads to opening up the mindset to new activities. So not only is Trump saying that, you also have Bessent saying the same message. And I think the amazing thing about this administration, everybody's talking the same message. The tune is the same across the board, right? And I thought this was pretty interesting. Equity market sell off is a MAG 7 problem, not a MAGA problem. Yeah, so pretty tough. Again, straight, and it's the truth, and they're just shooting straight the truth, right? This is what we're going to be doing. Deal with it. And I think the other thing is Scott Bessent made very clear that Wall Street has to go through a detox, and boy, are we going through a detox. Jesus, it's constantly dripping and dropping. I think there's some 5 trillion in value that has been lost since the new year. $5 trillion. I mean, I don't even know how big that is, but that is a significant amount that people are feeling that, especially those on Wall Street. So that's out there. But what I thought was really interesting is, I don't know, any of you following Mark Moss? He's got a YouTube channel, really good YouTube channel, talks a lot about financial insights. And he also has a newsletter, which I thought is really interesting. And well, I know it's pretty interesting, but he actually had some interesting insights here. So I'll share this. So the mainstream media is blind, right? What's new? We know they lie to us and they're blind all the time, right? They keep telling us that Trump's 25% tariffs on Canada are about fentanyl, borders, and trade deficits, but that's not true. It's reshaping global power. And all it comes down is to one thing: resource control. It's really, and I think that's really the word about it, right? And that's really what he's talking about. And if you read the newsletter and you come down to here, he's got a really good summary of what it's about. Control the minerals, control the energy, and controlled everything built on top. So what does that mean? The power grid, military capabilities, AI development, transportation systems, the entire tech stack is all heavily reliant on minerals and energy. Without energy, none of that works. And so if you think about it, all of this taxation, and this is what he goes into, really good, well structured, right? So it's all about the resource control. And so what he talks about is really, it's about energy, right? So let's look at Canada as an example, right? It's 25% tariffs, but energy related resources are only receiving a 10% tariff. So it's not a flat 25%. And he's always open to negotiation. So ultimately, if there is reciprocity, I'm sure these will change. But ultimately, it's all about energy. And you can see that here. Uranium, why is uranium important? It powers nuclear reactors. And bear in mind, a lot of the naval submarines, the naval ships are using nuclear power as a means to propel themselves. Why is nuclear power so important? Number one, you have an ongoing energy supply on these ships. Number two, you don't need to dock that long and retank up every time. So it allows you to be undergo on the ocean for much longer and be much more independent than you are if you have to dock and then tank up. And then, of course, that's when you're most vulnerable, when you're docking and you are tanking up. And they learned that through Pearl Harbor, I guess. That's where the Navy fleet really got to experience that firsthand. Lithium, nickel, cobalt, all super important as it drives energy storage and EV, electric vehicles, and of course, a storage of energy. Where do you do that? And lastly, graphite, rare earth materials, right? These are critical materials that are embedded in semiconductors, missiles, AI hardware, computer hardware, quantum computing, and you look at all of that, right? So those materials, those commodities are all really important. And by the way, if you go to truflation.com, you can track all of these commodities. So Truflation, for example, here we're tracking nickel futures. You can track lithium, so you can actually monitor this and go and find out. You can track lithium and, of course, uranium. We also have silicone, industrial silicone, which is also another important ingredient for a lot of these semiconductors, right? So they're all glazed over with industrial grade silicon, so they're protected. And they need to be in dust-free environments. Anyway, so here you can see as well sort of all the lithium, all the commodities and how they're moving in price. Down a lot from a year ago, right? So a lot of the commodities have come down significantly in a year against the US dollar, that is. And so, yeah, so back to this, right? So that's really important. And Canada is the number one source for most of those materials. Uranium supplies 30% to what the US consumes. And the US doesn't consume that much, but 30% of it's still coming from Canada. Nickel, nearly half of the primary nickel comes from Canada. Cobalt, graphite, rare earths. Canada is the major producer and holds some of the largest reserves on the planet. And maybe this is why Trump is constantly poking at making Canada a 51st state. He's a real estate person, and land matters, and land with resources matters. And maybe that's also why Greenland's so interesting. You've got all of these assets there. But what does that tell you? Right? So if those tariffs are coming in onto or being dropped for those products, it's actually going to allow for the development of these industries. The US wants to stockpile these raw materials. Why? Because it allows them to have more control of their own destiny. And one of the things I thought was really interesting was, obviously, Elon Musk has been out there for a number of years already. As I said a few years ago, AI scaling constraints will move from chips. So it's no longer about the semiconductors. It's about voltage. It's about transformers. It's about electricity generation. So what you do is when you generate electricity, it comes out at a specific high level voltage. So that output is super powerful, super strong. And so what you do is you build transformers along the way. So you take down the power, basically, along the ways, and you still want the output of electricity. So that's a whole new topic. I won't go into it, but electricity is definitely one of the core ingredients that we all depend on, and any economy is hyper correlated. The performance of your economy is hyper correlated to the performance of electricity. There's been numerous studies out there that as electricity in a nation grows, so does the economy. And there is no economy that is poor that has good electricity. So electricity really drives growth. And I can't remember, there's a pretty strong correlation, some law I'm sure somebody came up with, where basically for every I can't remember, every half a GDP percentage growth, you need X percentage of extra mega, giga, terawatt hours. So this is what everybody's talking about. It's all about energy, and this is why they are getting a bit of a reduction in the tariffs. And that's why these specific industries are going to actually experience a economic boom or a financial reward. So if we are looking for alpha, who are going to be being granted to build out uranium? We talked about modular reactors, small modular reactors, electricity reactors. The grid is going to get an upgrade. Who's going to be helping build out that grid? What technologies are going to be used? What and who are the suppliers of small modular reactors out there to build next to data centers, to build next to manufacturing plants, so that the energy generation is close to the facilities that require them. Yeah, and remember, all of these factories that are being invested in and data centers that are being built out are all going to be using AI chipsets. So the energy requirements are going to be double hungry. I've got robots in there, not only robot arms, almost we have robot people running around there that are all using AI and sensors, right? So those chipsets are going to be power hungry, cool hungry. They need to be in cool environments. All of those things are going to come into ground. So how and who and what are some of the companies building in that category? Um, yeah, there was a report. Pack Chicken. Are you guys following him on Telegram, on Twitter? Sorry, follow him out. He did a really good insight into humanoid robotics, a rare 0 to trillion opportunity, right? So this industry is going to go to trillions of dollars, and this is just humanoid robotics, right? You also have the dogs that are on wheels. You have dogs, and there's a really good podcast out of a company called River that I did. I met them. They're manufacturing four-legged robots. Amazing, right? With wheels, so they can go super fast and can cover bigger areas than any humanoid can. And they can then go upstairs. I mean, it acts basically like a dog, just much faster. So all of these elements are going to come into life. But this is a really good report because what he does is he highlights, number one, I've been in robots for 27 years. Why do you think it's going to be trillions? You know, humanoid robots are essential for human labor, except no sleep, no complaints, no Medicare. Built in a few hours instead of 20 years. If the labor is infinitely scaled, multiplied by cost of production, cost of living, would move towards zero. So we would have all of these humanoids basically building and looking after us. Um, so how do we get exposure to this? So I thought this was really interesting. So where do we want to invest in this opportunity? And as the market is correcting itself, is this the bottom? You're never going to get the bottom, but you're going to get close to the bottom. So let's have a look at all of these elements here where you can invest. And as the prices have come down, and as Besant has said, you know, it's a Mag 7 problem, not a MAGA problem. And Trump has also very clearly indicated that we're not too worried. Wall Street will do fine, right? So they won't do fine right now, but they will do fine in the future. So what can we find that is going to be in the future? Robotics, obviously. So let's bet and capture some of the opportunity around that. NVIDIA, Tesla, Intuitive Surgical, ABB, Boston Dynamics, owned by Hyundai Motor Group. And didn't we have Hyundai do a big investment in the US? They announced in the Oval Office, they came with Lutnick and David Sachs, and they announced a huge investment into the US. Xpeng, check out these guys. They're very good. I think super undervalued. Their cars are super popular in China. So they do EV vehicles, but they're also doing humanoids, and they're listed in the US, so you can get them early. UB Tech, another robotics company, listed in Hong Kong, only 5 billion. But if you look at 21 billion, 5 billion compared to the 780 billion, the 211 billion, the 112 billion, all of a sudden you're coming into ranges that are 21 billion. And you look at Xpeng, they're competing directly against Xiaomi. And look at Xiaomi, you know, they're down at 170 billion. So look at the difference. Where do you see the opportunity? People are raving about Xpeng and their cars. Anyway, this is a really good report, super interesting. He looks at then all the different humanoids, the different focuses, etc. So interesting. TLDR, you know, Unitree is the obvious winner, but Unitree is a private entity. You can check them out. You can buy their four-legged dogs. You can actually buy it online and have it sent to you. Maybe now you have to pay a bit more because it's coming with tariffs. But the tariffs on China is where it really hurts because I think they double down on tariffs on China. But yeah, I think, you know, that's where you see here, you know, just in China restricts companies now from investing in the US. So that's what they did. I don't know if you saw the BlackRock acquisition or investment into, there's a whole drama around BlackRock investing into the ports, Chang Kong ports. Chang Kong is a Hong Kong listed company. It has always been in infrastructure. It bought a lot of energy products, utilities, as well as ports. They're very big in the shipping business. And so ultimately, these ports have created landing lots around the world as all these ships need to dock and then offload on ramp new different types of content, material, goods, etc., which I call content, but actually they're goods and vehicles and all sorts of commodities, etc. They're the manufacturing of the world, and so they need places to go from China. And Chiang Kong has a lot of these shipping ports in China too, by the way. So around the world, they have a lot of these shipping ports, and ultimately, they're trying to block BlackRock from buying into Chiang Kong and taking over some of these shipping ports. And it turns out it all has a little bit of a saga because there's this group, Mediterranean Shipping Company, MSC, huge shipping company. And what are they doing? They're actually behind and a big investor in BlackRock. So BlackRock's doing the investment, but ultimately they need expertise and experience to manage, because BlackRock doesn't have expertise in managing this stuff. So they need to find the expertise in managing it, and they're getting it from this company called MSC. So there is some sort of partnership between MSC, which is actually, I think, a Swiss company, um, or headquartered in Switzerland, but it's an Italian family that owns it. And they're involved in this together with BlackRock to buy up all the shipping ports around the world. And why is shipping ports so important? Instead of having military bases around the world, China has shipping bases around the world. They have taken over a large portion of the shipment going through a lot of these different ports and container terminals. And so a lot of their containers are sitting on these container terminals waiting to go either in or out. And what is in these container terminals? I'm sure not everybody inspects every single container because the volume of containers are so big, and they're actually big. And so a large portion of that material is being transported around the world through shipping ports. And so that's why shipping ports are such a strategically important platform. But yeah, that's sort of what's happening in the background, and a lot of activity going on over there. You know, why are we talking about this? Why are you coming to Truflation, or why are you coming and asking our AMA about this stuff, right? Yeah. Do you guys have no sound? Oh, bam, I just saw this. Sorry, guys. I don't know why it's so quiet. How about now? Is that better? Must be much better now. Anyway, yeah, it seems like, yeah, people coming back, people going. I don't know what, but anyway, I've got to keep going. We'll upload it afterwards if you can't hear it properly. All good now, thanks. Yeah, look, yeah, why are we talking about this, and why is this important? We're just trying to highlight where the industry's going and provide all of this economic data underlying that, and try to bring this to you, right? We tried with the EV index. You can go to Truflation, spot the EV index. So rather than investing in companies where you might not be able to get access to, you can now come in and look at the EV index and identify and invest in all the raw materials that go in there. So I can't buy Xpeng because it's only listed on Hong Kong. Which account allows you to invest in Hong Kong listed? And do you have an account there on that exchange? And so if you don't, you need to get access to that. And so what we're trying to do is make a lot of this available. So what we've done here with the EV index, for example, is really just highlight the raw materials that go into electric vehicles. So you've got platinum, palladium, lithium, nickel, copper, cobalt, all of those assets and commodities that you see Canada being a large supplier to, but also China is as well, and so is Australia. So what does that look like, and how will this pan out? But what we're trying to do with these indexes is provide you with the ability to not invest in Xpeng or into Boston Dynamics or ABB because you can do that anyway. I want to get into the raw material tied to the growth of humanoids. What does that look like? If it's going to be a $1 trillion industry, how do I invest? Where do I invest? And then what can I do to participate? Should we be developing a humanoid index? Let me know. Happy to do that, right? But you can see a lot of that here. And so this is just one of the examples that we're working on. And why a commodity is so important, right? Again, not only did Elon Musk mention about it, it's very clear that Donald Trump has realized the importance of energy and the importance of minerals, not only as it relates to the build out of electric vehicle, of energy, but also to strengthen the defense industry and free up the dependency on other nations who are manufacturing some of the goods that are being shipped to the US. So I'm trying to build up factories. So what am I going to do? I'm going to, with immediate measure, increase the mineral production capability and give permissions to do so. And that's exactly what Donald Trump has done. And when I say I, it's not me. I'm putting myself in his position and using my name to do so. But that's ultimately what's being done here. So a lot of effort in terms of getting back that production, that mining, the raw materials, the resources, so that we can control the flow of energy and anything built on top of that and the distribution of that. So yeah, obviously very clear mandate, and something to pay attention to. I think the other thing that really stood out after all of the tariff stories is really the 10-year bond. Here, Charlie Shrem talks about the 10-year yield. It's dropped from 4.8% to 4.18%. So that's basically bonds on 10-year yields has dropped significantly. And so what does that mean? We all know that the drop that big has a significant impact, and it's inversely correlated to interest rates. So what does that mean for interest rates going forward? And given that the fact that there's $36 million in debt, what is happening here? There is some refinancing going on. So I'm going to go and buy these bonds off the market, lower yields, trillions in interest rate savings. But that's not quite true, because the interest rates are tied to the bonds, not necessarily to the yields. The yields are tied to the tradability associated with those bonds. So the demand is lower. The demand is higher if the yields are lower, because the price of the bonds are going up. So that means people are pricing and wanting and demanding these high interest bonds, right? So they were 10 years old. Oh no, 10 years old. Maybe interest rates were at zero. So why are people wanting them? And there seems to be a big shift, which we'll talk about a bit in another podcast. There's this Plaza Accord that took place back in the 70s, when we shifted away and that we tried to reduce the value of the dollar against other currencies to support exports out of the US and US products in other markets. And I think the big drive is to try and do something similar around this. And what there's going on right now is a Mar-a-Lago Accord. And what's the Mar-a-Lago Accord trying to do? It's trying to convert these 10-year bonds into 100-year bonds. So you will be able to buy a bond for 100 years. And you buy it today, that means the government will pay you back in 100 years. But ultimately, it's about liquidity. It's not necessarily about waiting for the whole 100 years. Can you trade that? And does the yield make it attractive to trade it in the market, right? Historically, the longer the term, the higher the interest rate. And so, yeah, because the risk factor is much higher, right? But in this case, maybe to build a platform for the next 50 years by building out all of these resources and building out the nation's manufacturing capability in the US, is that setting the way for a 100-year bond. Let's see what comes out of this Mar-a-Lago Accord, and we'll share a bit more with you as we dig deeper and more of that information comes to the top. Yeah, that's sort of what's happening. So stay tuned to that. And I don't know if you've been tracking, but we've been telling you for a while now that if you follow Truflation, every time it peaks, so does the yield come down, right? So when inflation peaks, the yield usually comes down, and you see the same. Not right now. If you look, we've dropped significantly again. Maybe that's been why we've seen this drop in yield, right? So if you look at Truflation and you see, if you watched on Tuesday, ha ha ha, and if you didn't, too bad. But when you watched on Tuesday, we went into the fact of why inflation dropped, right? So you can see here a significant drop in inflation. And is that correlated with the drop in the 10-year yield? I don't know, but we seem to see a trend. So here you can see the drop, and that drop right here is equal to possibly the drop in the 10-year yield. And that we are seeing consistently across the Truflation graph and analytics. So stay tuned. Are you tracking Truflation? This graph and these insights will be brought to you on a bigger scale. You saw how we can correlate now Truflation movement with Bitcoin movement. So how can we try and do this with the 10-year bond as well and bring more credibility and track record and giving you more alpha as you're interested in that? Yeah, so that's pretty much it, what I wanted to cover, and thought that it would be an interesting story. What I did want to bring up is just on a side note, right? That sort of covers the Liberation Day insights, what we talked about around tariffs, what that means, where are the opportunities in tariffs, and what does that mean from an investment standpoint for you, as well as for the amount of money that the US is attracting. Right now, there's no other country that's attracting $5 trillion in investment, and from private entities. That's not from public entities. So a lot of movement happening and migration towards the US. At the same time, I just wanted to change the topic a little bit and switch across to Monday. We had a brutal week. The week before that, we had a brutal couple of days again. I talked about the 5 trillion in losses, and guess what? Jim Cramer comes out on Monday, the March 31st. Jim Cramer on CNBC. I can't think of a dumber day to buy stocks than today. And exactly on the point, market picks up again. And so, yeah, so he's right on the second. And so, yeah, always do the opposite of what Jim Cramer does. And so on index.fun, you can see inverse Cramer index. So you can now bet up or down on the inverse Cramer. So yeah, you can see here it went up. So did you bet up? You can come here and do the prediction market. You can see we've updated some of the features here. You can see live number. How is this ranked? What's the return been in the last year? What's the CAGR? How has it performed against S&P 500 and versus Bitcoin? So you can see all of that. And what's in here? He always talks about Bitcoin, Palantir, Pfizer, Tesla, Coinbase, Solana, and gold futures. We didn't talk about S&P 500, but yeah, so that's in the portfolio. What's the breakdown? And there's some really cool features that the team have been working on around this. How can you then edit once you've launched an index? You can then go and edit it. You've got some leaderboards coming. So all of this coming live in the short future, but we're really building, developing, and enhancing the index.fund. So go sign up. Please like, subscribe, and follow Truflation, all of the sites, Truth Network, this video, and we'll bring more to you very soon. Here, Thibaut Orger. How can he look professional when the tariffs calculated are my even right? What does 67% of tariffs from China come from? Yeah, so there are two loads of tariffs in China that have been layered on, and that's where that comes from. I don't quite understand the first question. How can he look professional when the tariffs calculated are from my even right? Um, are calculated. Yeah. I mean, ultimately, I think, he's made it very clear that he wants to build the external revenue service and not the internal revenue service, right? So I don't want the IRS, I want the ERS. And how do I reduce taxes for citizens in the US and then tax the export or the import of that? And if you look at the reciprocal status between each of the nations, it does look a bit sus and it is not very fair. And I think what's happening is, I mean, we know what's happening. He's just pulling the band aid off. These policies and support and tariffs have been made, the US market has been made very accessible to a lot of nations to support them in their redevelopment from days of World War II. And now we're coming back to a position where, we're beyond those days and nobody's done anything about it. Nobody's changed it. Nobody changed it since China entered the WTO. They've had the emerging country status ever since. They most places still do, but nobody's ever changed that. And so now, bang, in one go, we've got to change all that history. And people obviously don't like it. People hate change, but change going forward is the only constant. And if you live in crypto land, you know that you're constantly dealing with change. And so we just need to get harder, tougher, and the market's going to be harder. We're going to actually have to pull up our sleeves and get working. I think the fortunate thing is a lot of us in crypto land are working really hard. It's 24/7. We work on the weekends. We don't have and get the luxury of going always and taking time out. We do have some times when it takes time out, but we always are on and connected thanks to phones. And very soon we'll be connected with glasses and we'll be able to see the readers here and stay in touch. Um, the reciprocal thing is weird. I don't think so. I think I expect what what if I invite you to my house, hopefully you invite me to your house. And if you don't invite me to your house and I've invited you 5 times to my house for dinner, for example, would you invite me back? Would I invite you back if you never inviting me? I would feel a bit abused, wouldn't you? And is that fair? Is that something that you would like from your partners, your friends? I think so. I think you want some sort of you want your friendship returned, right? You want a feeling at least that you have a friend that is returning your friendship. And that's the way I look at it. It's just very, yeah, I guess in Trump's word, commonsensical. Numbers are from nowhere. That I agree with. The numbers are crazy. They don't make any sense whatsoever. Why 10% here as the bare minimum? And why do certain nations get 10% and others none, right? And yeah, so somebody sent me an interesting component around the tariffs, right? Yeah, so the universal minimum is 10%. Yeah, we saw 34% tariff on top of previous tariffs in China, which were at a rate of 54. So you're getting 54 plus 34, which is 88. So, which is a very lucky number in China, 88. People love the number 8 over there. I don't think it's 8, but it's come down to maybe a 67%. But it's very clear that administration targeting China, as many Chinese companies use Vietnam and Cambodia for avoiding existing tariffs. So quotas are put onto a lot of nations as well, how much you can import across which type of products. And so ultimately, Cambodia, Vietnam are companies where Chinese companies are countries where Chinese companies are setting up manufacturing capability so they can build out there and use the Vietnamese or the Cambodian quota to ship those products into the US. So Vietnam got 46%. Taiwan got 32%. So I guess they're just going to need to open up, while Switzerland got a 31% reciprocal. China's hit very hard now, full list below. So yeah, so that's where US government bonds and gold and oil, I guess, are big winners as well. High risk assets are going to be stocks, etc. Right? So we're all hurting because we all have crypto as our assets and stocks. as our assets if you have stocks, or if you don't, crypto is the big place where we have our assets, and liquidity is being taken out of the market. But one thing, there was a really good post from Arthur Hayes where he talks about money printer will go burr, right? Hayes. Yeah, so if you look here, money printer will go burr. Yeah, so here, Trump's tariff formula is a further evidence he's laser focused on reversing these imbalances. The problem for treasuries is that without dollar exports, foreigners can't buy bonds. The Fed and banking system must step it up to ensure a well-functioning treasury market, which means burr. Printer will go burr. Yeah. I don't know why Switzerland. Good question. I guess, maybe a lot of the refined manufacturing or fine, high tech manufacturing capability is built out of Switzerland. I don't know. I'll have a look into that, but that's definitely a bit of a funny question. But yeah, the printer will go burr, inflation will be back, and even UBS. I mean, not that we take much word from what they say. I just don't trust a word anymore out of a TradFi company, because they'll tell you one thing and they'll act a totally different way. So always mistrust these institutions. But Koblesi Letter says UBS is a permanent, with Trump in place, there'll be inflation rising to 5%. We've always said that 3 is the new 2. So forget the 5, the 2, 3 is the new 2, and it's going to go up again. But yeah, will they bring it down? I'm sure it will, right? And I think one thing that actually in the letter that I was sharing from Mark Moss, if you have a chance to have a look at it, you can actually see in there where he talks about, he did the analysis back in when Trump's first, where was he talking about? Yeah, when Trump is running the same playbook that he ran back in 2018. So in 2018, Trump applied 25 tariffs on foreign steel and aluminum. What happened? Initially, price spiked as expected. But within 18 months, US production increased significantly, prices normalized and eventually fell below pre-tariff level. Domestic investment surged across the industrial sector. So the temporary pain triggered a renaissance in domestic production. And I think that's all it comes down to, right? Again, all it comes down to is control the minerals, control the energy, and control everything built on top of that. Hope you enjoyed this. Thank you, everybody. Have a great weekend, and I'll see you again on Tuesday. Bye for now.